Most traders lose money, not because they don't know where the market is going, but because they don't know where the liquidity is sitting. Price doesn't just move randomly, it moves to hunt orders, sweep liquidity, and then either reverse or continue. And the truth is, if you can see those liquidity pockets ahead of time, you can plan your trades much better. That's exactly what this indicator does. In this video, I'm going to show you the Liquidity Pro Map by ChartPrime, explain how it works, go through the settings, and show you exactly how to use it with live trade examples. So let's add it. Open TradingView, then click on Indicators and search Liquidity Pro Map. Select the one from ChartPrime and add it to your chart. As soon as you add it, you'll see mirrored shelves appear on the right side of the screen. Green shelves show buy-side liquidity, red shelves show sell-side liquidity. The brighter the shelf, the stronger it is. You'll also notice PC marks, which stand for points of control, and these are the single strongest levels on each side. These often act like magnets, and price has a habit of coming back to them. Now let's talk about what you're actually looking at. The Liquidity Pro Map splits historical price action into buy-side and sell-side profiles. It stacks candle volume into bins to simulate where liquidity is sitting. The brighter and more defined the shelf, the more concentrated the activity has been. The PCs mark the heaviest level of liquidity. Price often gravitates toward them or reacts sharply when it touches them, so they're great reference points to keep on your chart. On the right edge, you'll see those mirrored shelves building out. The green shading shows where buy-side liquidity concentrates. The red shading shows where sell-side liquidity has built up. Think of them as an X-ray of the chart showing you demand and supply zones based on real volume. Then you have the PC levels, which are basically the gravitational centers. Around these levels, you often see sharp reactions or heavy price action. Running along the edges, you'll also notice the skew lines. These polylines show you who is winning the tug of war. If the buy skew is rising strongly, buyers are absorbing sell pressure. If the sell skew is strong, sellers are in control. There's also a very smart feature called extension logic. Each liquidity shelf extends back in time until price actually crosses it. If price hasn't touched it, it just keeps extending all the way back to your look-back window. This is important because it marks untapped zones that often act like magnets. When you see a bright shelf that hasn't been tested, chances are good that price will come back to sweep that level later. Something else that makes this indicator stand out is how it calculates volume. Instead of just dumping volume into static levels, it uses a standard deviation method around the close of each candle to distribute the volume into bins. In simple words, it adapts to volatility. When the market is moving fast, the bins widen. When the market is calm, they tighten up. The result is a much more natural liquidity picture that feels closer to how orders really cluster. Now let's check the settings because this is where you can adjust it to fit your style. You can open the settings from here.
Do you feel like everyone around you benefits from artificial intelligence but you have no idea where to start? Don't wait any longer. Start today. Our free trading bot is simple to use, powered by artificial intelligence, and can earn you up to 1% profit every single day. Over 500 members have already joined. Click the link below now to get free access. This is your chance to harness the power of AI and take a step toward a financial boost.
The look-back option lets you control how far back the map is built. Shorter lookbacks are better for scalping and intraday moves, while longer lookbacks give you swing structure. The resolution option changes how many bins are created. Higher resolution means finer detail but also more shelves. Lower resolution makes it smoother. You can also toggle PCs if you want to hide them, or simplify the visuals if the chart feels too busy. Personally, I like to keep a moderate lookback for context, and then tighten it when I'm ready to find an entry. Alright, now let's talk about how to trade with it. For a buy setup, you start by looking for the brightest green shelf. That's the buy-side PC.
For example, on one day the PC showed a volume of around 600,000. That's a very strong level.
So then you grab the rectangle tool and draw around the shelf to cover the wicks and extend the rectangle forward. This way you can keep tracking it even if the shelves update later. Then you wait for price to come back and test that area. Ideally, you want to see a wick target or a quick dip inside followed by a close back above. That shows buyers defended the area. After that, you wait for a bullish confirmation candle. A bullish engulfing is my favorite.
Once that prints, or once you have strong bullish indication like 3 green candles back to back, you can open a buy trade.
And after that, you can set the stop loss under the rectangle and set the take profit at 1.5 times the risk.
In this example, price tapped the level with a wick, then we got strong green candles.
And after some time, as we can see, ran straight into profit. For a sell setup, the process is the same but flipped.
So to open a sell trade, look for the brightest red shelf, the sell side PC with a high volume.
After that, create a rectangle around it, covering wicks, etc., and extend it forward. Then wait for price to retest it. Just like we can see happened over here. When price taps the zone with a wick or briefly closes inside then back below, you look for a bearish confirmation candle.
A bearish engulfing is the best one, or 3 red candles together also works well.
So if these conditions are fulfilled, you can open a sell trade over here. Entry goes there, the stop loss can be set above the rectangle you created, and you can target a risk to reward ration of 1.5. So again, we are looking for a candle to touch the level, then immediately a large red engulfing candle after that is a strong signal. So you enter a sell position, place stop above the shelf, and let the trade hit profit. Now let me also show you how a false signal looks, because not every setup will work. In this example, the indicator marked a red shelf. Price tapped our extended rectangle and printed a bearish candle, so the sell entry looked valid. But instead of continuing down, the market reversed and broke straight through the shelf. This is why stop losses are critical. In this case, the stop above the rectangle saved the account from a big loss. The key point is, not every signal works, but with risk management, you survive the losers and catch the winners. Let's also talk about untapped shelves, because these are powerful. If you see a bright shelf that hasn't been tested for a long time, extend it forward and watch it. Price is drawn to these levels. Sometimes it will sweep the level with a wick, take out liquidity, and then reverse. Other times it will reject strongly right at the level. Both can be tradable, but patience is key. In summary, Liquidity Pro Map takes messy raw volume and turns it into a clean, adaptive picture of where buy and sell orders are sitting. You get mirrored profiles to frame support and resistance, untapped zones that often act like magnets, PC levels that act as gravity points, and skew lines that show absorption in real time. Combine all of that with simple price action, wicks, engulfing candles, rejections, and you get a reliable system for trading liquidity sweeps. If you found value in this video, leave a like, and if you haven't already, consider subscribing so you don't miss the next video. Thanks for watching the video till the end. I'll see you guys in the next video.